SOFI Technologies and Upstart Holdings are two fintech, highly correlated stocks. Both of these companies are related to lending. The industry is highly cyclical, and increased interest rates may decrease borrower demand for lending products and vice versa. Inflation and other economic pressure also has an impact on the industry as borrowers face uncertainty about the impact of rising prices on their ability to repay a loan. SOFI Technology is the parent company of Social Finance, an American online personal finance company and online bank. SOFI was founded in 2011 and became public via a merger with a special purpose acquisition company at the end of the first quarter of 2021. The company provides financial products such as student and auto loan refinancing, mortgages, personal loans, credit card investing, and banking through both mobile app and desktop interfaces. SOFI is one of the largest marketplace lenders. The company maintains a policy of no fees for their loans aside from the interest. It has partnered with several insurance companies in order to offer life insurance, auto insurance, homeowners insurance, and renters insurance. In 2018, the company launched commission-free trades of stocks and ETFs. In 2019, the company launched a partnership with Coinbase to offer cryptocurrency trading. As of December 2021, it had $523 million under management. In April 2020, SOFI signed an agreement to acquire Galileo Financial Technologies, the powerful API and payments platform. In July 2020, SOFI launched a partnership with Samsung Pay to launch Samsung Money by SOFI, a cash management, checking savings accounts with a digital and physical debit card. Later the same year, SOFI launched its first ever credit card. In January this year, SOFI received approval from the Office of the Controller of the Currency for a national bank charter. SOFI's total number of members increased to 3.9 million in the first quarter of 2022, up 70% year over year. The number of Galileo accounts reached 110 million, up 58% year over year. So SOFI has different business operations. What about Upstart? Upstart is a leading AI lending platform. It partners with banks and credit unions to provide consumer loans. The company developed an income and default prediction model to determine creditworthiness of a potential borrower. Upstart was founded in 2012 and went public via an IPO in late 2020. Now the company has 57 lending partners, up from only 10 since the IPO. In 2017, the Consumer Financial Protection Bureau allowed Upstart to use their machine learning model in the marketplace after a strict and careful review. In addition to traditional underwriting criteria, FICO score, credit report, and income, Upstart considers education variables, college attended, area of study, GPA, standardized test scores, and work history to develop a statistical model of the borrower's financial capacity and personal propensity to repay. In 2018, the Consumer Financial Protection Bureau stated that the results provided from the access to credit comparisons show that Upstart model approves 27% more applicants than the traditional model. It also yields 60% lower average annual percentage rates for approved loans. In many consumer segments, the results provided show that the Upstart's machine learning model significantly expands access to credit compared to the traditional model, and the company itself is confident that this approach is much more effective than the traditional model. 96% of Upstart's revenue is from banks or servicing with no credit exposure. 74% of loans instantly approved and fully automated. Bank partners originated 465,500 loans, totaling $4.5 billion in the first quarter of 2022, up 174% year over year. Conversion on rate requests was 21%, down from 22% in the same quarter of the prior year. Unlike Upstart, SOFI is deeply unprofitable, even on adjusted EPS terms or free cash flow terms. SOFI has improved its revenue to operating expense ratio over the last 6 quarters, while Upstart's revenue to operating expense ratio hasn't changed much. Also, Upstart reduced its estimate for profit margins, while SOFI expects to keep improving profit margins in the next few years. Upstart's revenue is forecast to grow at a good rate of 22.5% per year. SOFI's revenue is forecast to grow at an even better rate of 35% per year. Overall, Upstart's balance sheet looks better than SOFI's. Upstart's cash and equivalents exceed its total debt, unlike SOFI. And it should be noted that debt to equity ratio increased for both companies over the last quarters. As Stevens analyst Vincent Kaintic wrote, Upstart has originated loans on its balance sheets that it hasn't been able to transfer to its funding partners. This breaks the thesis for us of a marketplace lender, which is supposed to originate on the behalf of funding partners. But in any case, it was a small percent of total loans originated in the first quarter. After the massive crash during last months, Upstart stock seems to have adequate valuation, and SOFI stock seems to be more expensive considering that this is a profitable company, unlike Upstart. That's all for today, thank you for listening.